This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In today's video, I'll be going over the datasets and earnings and doing a technical analysis for the SPY and many other different symbols. Those other symbols will be much faster than the SPY technical analysis and less detailed. So if you're looking for something a little more detailed on that, this isn't it. But with that said, we'll be going over IWM, some of the high yield credit markets, semiconductors, volatility, precious metals, some of the FX pairings, and more. And that's all for the week of February 2nd, 2026. And with that said, let's go ahead and jump straight into the data. I just wanted to preface this video with the news that starting on the 9th, I'm going to be streaming in the mornings from 8 a.m. to 9:30 a.m. Eastern Standard Time, Monday through Friday. Uh, I am still working on getting a camera and everything and working on upgrading the microphone, still setting up the office and everything, but that is the plan. So I look forward to seeing you all there, and thank you everybody who tunes into these videos and supports me. Your support throughout the last few years has been, you know, life changing. So thank you, and let's go ahead and get into the video. Now, for this video, unfortunately, I'm not going to have the data notes on the side. I did not have time to fully write out the notes. They will be posted in tomorrow's video, so if you want to go ahead and copy those later, you can. But with that said, let's go ahead and jump straight into it. For this week, we have not a whole lot of data, but we do have some fairly important data sets. On Monday, we have the ISM manufacturing data, which is the employment, PMI, the prices, including the global manufacturing PMI. And this is all January data, so current data. And that's at 10 a.m. At 11:30 a.m., we have the Atlanta Fed GDP now. It's expected to come in again at 4.2%. This is quite a bit lower than what it was reading at. I believe it was up at what, 5.3%. For a few weeks. So this is a fairly low reading, and this is kind of happening out of nowhere. So um, it's interesting to see, what's causing this downward spike in the GDP. With that said, um, nothing. I'm really not anticipating anything too crazy coming out of Monday's data. If anything, it'll really be the manufacturing PMI. But everything else should be fairly in line. We've been, anticipating weaker and cooler data for the most part. And overall, for the last few months, we have been seeing that ever since the government shutdown reopened, or, the government reopened again from the shutdown. Now, on Tuesday, we have a very big data set. That's the JOLTS openings, or the JOLTS job openings. This is basically going to show how many positions are open for people to actively um, apply for. And it's a big deal because the current labor market is essentially, from all of the data sets and everything I've been going over, and what I can correlate from it is that really we're in a zero hiring environment. So, um, when we're in a zero hiring environment, that really means that there's pretty much zero jobs available. Companies are not hiring at all, and we know that because the unemployment has been high, even though last reading did come down a little bit. And we did see the U6 unemployment come down very, very slightly, which shows that there's a little bit more activity in the job search side. However, we're seeing a couple interesting things with the jobless claims, which are that the initial claims have been increasing while we've been seeing the continuing claims decreasing. Now, this doesn't exactly make a lot of sense when companies flat out are not hiring, the positions are not available. And we know that the hiring has not been up. just across the board. We've been seeing that and monitoring it for months and months and months now. So when we're suddenly seeing a ton of people drop off of the continuing claims, it either means one of two things. Either we're going to see a very, very, very massive increase in employment, where we're going to see the unemployment rate just drop like a rock this next reading, which comes on Friday, or it means that people are just flat out exiting the labor force because they're unable to find work, which that's a whole another problem in its own. That contributes very, very drastically to an increasing labor struggle, or a labor market struggle. So it's something to be aware of. This data is very important. So again, Tuesday, 10 a.m., the JOLTS job openings, very, very key data. They have been forecasting each time now that this would come in higher and higher, but it has just been declining, declining, declining. So, um, again, they're anticipating higher job openings, which even then, this is still very low. It's supposed to be much, much higher. So, and this is December, so it's still a month back. So keep that in mind. Now, on Wednesday, we have the weekly ADP non-farm employment change. Or no, this isn't the weekly. This is a major one. Okay, so this is the major monthly ADP non-farm employment change. They're expecting a slight increase. I'm not really expecting that at all because in reality, we've been seeing the weekly ADP reports coming in at either negative or very, very low in the positive, which, that doesn't really correlate to stronger numbers. And even then, this is very, very poor. This should be close to around 180 to 250,000. Um, that's not anywhere near that. So take that with many grains of salt. But we're still having some issues with the labor market. Now, that's again at 8:15. 9:45, let's see, global composite PMI. Okay, so this is the non-manufacturing side of the ISM data. Uh, Really, I don't have a whole lot to say about it. It will follow somewhat of the manufacturing side, not exactly one to one. But if we do see cooler numbers in here, very, very likely we will be seeing cooler numbers in here as well. Now, again, I do have, I guess, a bias right now of the economy seeing weaker data right now. Not that I want that to happen. That's not something I'm wanting out of. That's just how I've been seeing the data and how I correlate it. So Thursday at 8:30 we have the jobless claims. Again, I'm really not anticipating anything major from it. We've been seeing this happening for the last few weeks now, where the initial jobless claims have been slowly increasing while the continuing claims have just been slowly, well, shouldn't say slowly decreasing, but they've been decreasing fairly rapidly. This was very close to the 2 million mark at one point, and now all of a sudden we're at 1.8 million, and everything's looking like it's good to go, when in reality that's not what happened at all. We have Fed member Bostic speaking at 10:50. I don't really care about that too much. Fed balance sheet, so nothing's too major for Thursday. Now for Friday, this is the big day this week besides the JOLTS job opening, so really it's Tuesday and Friday. We can have a little volatility on Monday and Wednesday aside from, what's going on with the earnings, but really it's that Tuesday and Friday. Now, for Friday, we have all the very, very crucial data, the hourly earnings. This is current data as well. So this is for January. We have the non-farm payrolls, the participation rate. Excuse me, I can't say that very well. Participation rate. There we go. This is very important. This is something we're going to start monitoring a lot more. An increase in the participation, if I could say it right, participation rate would mean that there's more people trying to enter the workforce and just there's more workforce and labor market activity overall. So a higher participation rate would be a good thing for the labor market and the economy overall. But realistically, I'm still anticipating weaker data with that. Um, we have the private non-farm payrolls. We have the U6 unemployment rate, which again, that's kind of the entire workforce unemployment. Um, that dropped slightly. That was at a 8.7% prior. It dropped, let's see, I want to see the history. Yeah, it was at 8.7% prior, dropped down to an 8.4%. I really don't have any anticipation of what that's going to be right now. The unemployment rate was at a 4.6%. It did drop down to a 4.4%. Um, I really don't think it's going to move too much right now. I think that the labor market isn't really in the stance of we're seeing major layoffs or anything. We are seeing some layoffs. We are seeing positions close and headcount shrink, but we're not really at the point where we're seeing a lot of people just get dropped off of the employment. So really the 4.4% should probably hold unless there's been a lot of temp hires that have been let go that I'm not aware of. That can be the case, but I would assume that'd be a lot closer to, the middle or end of February when, the Valentine season and everything is all finished with. So we'll see what the unemployment rate has to give to us. At 10 a.m., we have the Michigan inflation expectations, and that comes with the consumer data as well. Very important. This data has been cooling quite a bit, so it's important to see what's going on with it. Other than that, really no more data for the week. Again, it's super crucial we pay attention to the Jolt job openings on Tuesday, and then pretty much everything for the morning session on Friday. And getting into the earnings for this week, we have quite a bit. As I mentioned last week, we are starting to get into the earnings season again. We've been receiving a little bit of our tech earnings, so there is a lot to go over this week. So for Monday, really I don't care about Disney too much. In the after hours, there's Palantir. That's always a big one. Um, I don't really think they're going to miss an earning right now, but if they do, that's kind of a company to buy the dip on. And that's something we could talk about if there's enough interest. Just leave a comment and I'll be happy to do a deeper technical analysis on that. There's NXPI as well. That's a smaller semiconductor company. Um, yeah, I don't think it's going to move the market too much if this dumped or had a very strong earnings. It's kind of like Palantir in this case. It's just another strong company in the mix right now. Now for Tuesday, let's see. We have PayPal, Pfizer, Mark. We played Mark a lot. I don't have shares going in that right now. I did sell previously. Um, the morning session doesn't really have anything that's going to move the market too much. Later in the day, we do have AMD, which AMD is basically the miniature version of NVIDIA. A lot of people really discount what AMD can do, and um, this is one of those companies that you can't underestimate. This is one of those companies where they can just out of nowhere pull massive deals. And they have a very strong yearly revenue. They're a very strong company. Um, this is something kind of like where Oracle, even though previously about Oracle I said that it wouldn't have major earnings to where it could really push the market, and of course that earnings they get a $500 billion dollar deal, but With that said, AMD's that type of company. AMD is the type of company where the market cap right now is, I believe, closer to 400 billion, and this could rocket up to the trillions very, very quickly. Now, again, they're not on the same scale as Nvidia. However, money can change hands and change that very, very quickly. So just keep that in mind. AMD is a massive company. Um, if they have a bad earnings, they can absolutely crush the market. If they have a good earnings, they can absolutely pump the market. We have SMCI. That's a smaller tech company. Played that a lot in the past. I don't really care about it too much right now. There's Chipotle. Um, don't really care about that too much right now either, even though I'm interested in the earnings because Chipotle has, a lot of what's the word I'm looking for? Face-to-face interactions with the consumers, just, all around America. So they get to see what's going on with the consumer market. It's kind of like Walmart or, McDonald's, some of these not so large market cap companies, but still some of the largest companies in America. So very, very important. EA needs to burn. Besides that, Wednesday, let's see, nothing really too important in the morning. There's Ellie Lilly, which again, many people in the group play. I don't trade it too often. But many people in the group do, and many people in the group trade it very successfully. There's Nova Nordist, which I've been adding shares since the 44, 45 range. My average right now is, I want to say 46 something. I have to check my long-term account, but I've been adding to this. I've been slowly adding to healthcare overall. It's definitely a company that I think that can grow absolutely massive. So it's something that I always keep my eye on, even though it's not going to be a major market mover in terms of, pushing the SPY up or down or anything. Now, really for Wednesday, it's going to be the after hours. There's Google, Qualcomm, ARM. We have Snap, we have Elf. Mainly, it's going to be Google and Qualcomm. ARM's a very big company as well, but I don't think they're the type of company to, if my mouse can actually zoom in onto it, I don't really think they're the type of company to pull out some, massive, massive deal out of anywhere. I can be wrong about that. I don't really like betting against these big tech companies right now in terms of earnings, so just keep that in mind. Um, Google can absolutely move the market a lot, so can Qualcomm, so keep that in mind. On Thursday, there's some oil in the morning, not interested in that. Amazon, obviously one of the mags. Amazon has a ton of market weight and can absolutely push the market up or down. Um, I kind of rank Amazon with Apple right now in terms of they can do a bad earnings and pull the market down, but it's not enough to really change the overall direction of the market unless there's something massive going on that Amazon releases. There's MicroStrategy. The company's pretty much burning right now, so there's that. There's Reddit, Roblox. Company needs to burn. Um, and then Friday there's CNC, which is it's another healthcare company that I've been slowly adding to. My CNC shares are up over 120%. We've been adding since the, um, geez, I forgot what. I have to check the chart. I want to say it was either 19 or I'm thinking of the wrong company and it was 25, but it was when it dumped super, super low and I told people to enter it and people called me crazy, but yeah, I'm interested in that right now. But overall, we're starting to get into some of the bigger companies, but nothing too major. Really, I'm waiting for, like Nvidia and some of those really, really, really big names, but nothing this week. Um, mainly for me, it's Google, uh, perhaps Amazon, but right now it's Google. AMD, I think isn't going to do anything that's going to dump the market. I think if anything, they could find potentials to rally the market. So, yeah, that's the earnings. But I wanted to end this segment off with the CME. This is the CME Fed futures or the Fed watch. Um, Remember in February we do not have an FOMC, so this is for March 18th. Now, currently, the chance of a rate cut is at 12.8%, so it has been dropping. As of last week, it was closer to 14%. It says 13.4, but it was up towards the 14, 15% point at one point during last week. So keep that in mind. A lot of the data sets you can pretty much look at the CME Fed futures right afterward, and you can determine whether the data was dovish or hawkish for the market. And you can make some good trades off that. But right now, it's about 12%. My current opinion is very likely it's going to be a pause just because we have been seeing quite a bit of hawkishness. And with the new Fed chair, which granted he's not in the position yet. However, the person that President Trump picked is actually fairly hawkish. I'm surprised, but he is a very hawkish person overall. So, um, that's going to weigh on future rate cuts quite a bit. So keep that in mind.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And jumping into the technical analysis for SPY, let's ensure we're on the daily time frame and our moving averages and Bollinger Bands are showing. Now, let me just kind of preface all of tonight's technical analysis. We're in between the bullishness and the bearishness overall. Um, there's quite a lot of signals throughout the overall market that we are going to have a major bounce. We're seeing this through the ADL. We're seeing this through a lot of different symbols being above their 20-day moving averages and being above their 50-day moving averages. And we're still seeing the higher yield debt market still holding very, very strong. Um, the overnight right now is currently down 0.88%. So the current price is 685 or basically 686. It just turned 686. So, 686, and you know, um, before even getting into any of the moving averages or anything, this is basically the perfect range of either we're going to bounce very, very hard or we're going to start seeing a slow grind down. Okay. Either this is matching a lot of previously what happened in February of 2025, um, or we're going to break that cycle and start heading for, clearer skies. Now, personally, I think we're on the path to head upward. Um, I do think that some of the data this week and some of the earnings this week can definitely do that. However, again, there is a lot of macro conditions right now that can definitely shake the market. There's still the yen carry trade that can unwind further. It unwound a little bit, but that can definitely increase. Okay. The last time the carry trade really unwound, it did it for about a month straight, and the selling in 2025 throughout February to April, the Bank of Japan was actually selling off quite a bit of equities during the time as well. So that technically was a little bit of that unwinding action as well. Um, that lasted, about 2 months. So are we out of the woods in terms of the selling? I'm gonna show you how to determine that, but just from the outlook of everything, I'm going to say that personally I'm bullish right now, but that can shift very, very quickly. So keep that in mind when we're going through the rest of this technical analysis because again, we're going to be going through a lot of different symbols and I want everyone on the same page with that because I might be bullish on something and bearish on another and you really have to kind of just correlate everything together. Personally, I've been seeing, again, overall, I've been seeing a lot of signals for a major bounce. I think that throughout Bitcoin, throughout precious metals, throughout equities, we have been seeing a lot of selling that hasn't really been going anywhere. Um, and what I mean by that is after all the super, super bearish narrative and sentiment we've been seeing probably over the last month and a half now, the market hasn't really gone anywhere. We technically hit a new all-time high. So in the grand scheme of things, the selling hasn't done anything. It hasn't taken us to new levels. It hasn't broken the consolidation. It hasn't done anything. So um that's a major signal that I'm looking at, but potentially this can be the start of a selling trend that can turn very large. So it's something to be aware of. With that said, let's go ahead and jump to the moving averages and everything else. And hopefully it will make sense why I'm still bullish. So with the close on Friday, we did have a little bit of selling. The market closed at 691.95, excuse me, 691.97. And with that close, it was a slightly bearish close because the 5 mile will be pulling down. The 5 mile right now on all of our brokerage apps and everything is going to be saying 693.93. I anticipate it opening around the 692.60. It could be lower, could be higher. Just make sure you mark that level. It's going to be very, very key. The 10 mile is at 690.25, so while technicals outside of the overnight price action, we're still above that level. The 20 mile is at 690.49, so only about 24 cents above the 10 mile. We're going to see the 10 mile if we see buying, of course. If we see buying to the upside, we will see the 10 mile start to climb above the 20 mile quite a bit as we start pulling to new highs and everything. But again, that's only assuming we're starting to see actual upside buying. If we don't within the next, 1 to 2 trading sessions, then the 10 mile will start continuing to pull down underneath the 20 mile, which is a very bullish or a very bearish signal. So just be aware of that. Now, with that said, the 10 mile and 20 mile are basically right on top of each other. So again, this kind of circles back to what I, started the segment with is that we're right smack in between consolidation ranges. Um, we had the upside here where potentially we were breaking out. Potentially we were breaking out. That didn't happen. Broke down. From that breakdown, we bought up, rode that upside, we wanted to see the upper Bollinger, but once again, for the third time, we had another rejection. From this rejection, back below the 20 mile. Again, every time we hit this 20 mile range, usually it's a very strong buying range. Okay. Um. So with that said, the 50 mile is at 682.93, still slowly pulling up and still above our lower Bollinger. So that's a bullish signal overall, meaning if we're going to sell all the way down to the lower Bollinger, very, very likely majority of our supports would still stay above the 50-day moving average. So for overall, I think that's a bullish signal as well. The 200 MA is way down here at 638, so not really worth mentioning too much right now. The upper Bollinger's at 699.44, and that will be staying around that same range. Very likely it'll pull down slightly on Monday, but it could be very, very close to that range. Um, Lower Bollinger 681.55. If we have a major rejection from this 20 mile range, if the 5 mile pulls down to the 20 mile and starts pulling underneath the 20 mile, then that's really when I anticipate having that lower Bollinger move. But the lower Bollinger move can occur prior to that, as you can see here. The 5 mod did not fully cross underneath the 20 mod before we had a fully, the full collapse to the lower Bollinger. So be aware of that, that if there's going to be a major sell-off, it can happen very quickly and they will be targeting that lower Bollinger range. So the 681.55, that would be a lot closer to that 680 range. Very likely they would try to form a cup to the downside and close around that 676.67. Sorry, I'm talking so slow. I'm trying to look at the numbers. Um, Now, one thing I wanted to show is that and let me make sure you guys can see it. Yeah, you can see it. The ADL over the last two sessions, we saw, quote unquote selling. We're seeing a massive, massive spike in the ADL. Okay. Um, I always call the ADL the lie detector because this is showing the actual inflow and outflow of funds. So if this is a potential bounce that I'm thinking it is, then this ADL is signaling that to us because it's showing that people are putting money into this. Now, another signal I wanted to show is on the weekly time frame, is that on our weekly time frame, prior to the sell-off that happened in um, early February of 2025, throughout February and April. But ever since then, we have been above the 20 mall on the weekly time frame. Now, every time we have the 20 mall get touched, basically, it creates buying to the upside. Now, s- even with the last rally, that remained something that was true. Touch the 20 mall, upside bounce. Touch the 20 mall, major upside bounce. Touch the 20 mall, upside bounce. Touch the 20 mall, finally collapse. Okay. This looks like a very potential upside bounce in terms of the weekly time frame. So keep that in mind that this would suit that very, very well if we're going to get the upside bounce that I'm anticipating. Um, but with that said, we really have not had a lot of support tests in the weekly time frame throughout the year. So it would make sense to have a little bit of selling action just purely out of support as well, on the weekly time frame anyway. Now, with that said, all right, got them adjusted. So this is sort of what I'm looking at in terms of the grand scheme of things. And this is again the 4 hour time frame. You should probably follow along on the hourly. It would make a lot more sense. I'm showing the 4 hour just because it looks a lot better on the computer version for Weeble. So with that said, we have a lot of different structures here. We have some potentially very, very major bullish structures with this larger inverse head and shoulders. We talked about this last week, how we can either start building support above this liquidity range and start seeing a bounce, or potentially we could see that pull all the way into that yellow range and then bounce out of that if this, inverse head and shoulders is going to fully play out. Now, with that said, we have been anticipating this cup with this handle, and from the handle, pulling upward and creating all-time highs, creating, continuation of the bullish structure. On this cup and handle right now, potentially, if we don't see further selling, is that we have a double bottom. Now, something to be aware of is that from the bearish standpoint is that there is a lot of bearish structure going on in here. We have, the smaller head and shoulders here. I just deleted one of the shoulders from the smaller one. Um, we have a larger head and shoulders on top of that. So if this is going to play out, then we're technically inside of the consolidation range. And as always, if we're inside of a consolidation range, generally we trade from the top of that range to the bottom or the bottom to the top. So that's kind of what we should anticipate if we're going to stay in this range. That this bearish structure should finish playing out and pull us downward. Okay. Now, if we're going to build support on top of this consolidation range and continue upward, like I'm anticipating, then we're looking for this double bottom to play out, or not this cup, but the nested cup here to finish out to the upside, which would give us an all-time high. That previous range was at the 699, so we would basically be expecting a push all the way to the 700 range at that point, um, for that handle to really show that it's finished out. Um, Again, we're in between two major structures here. We're in between this cup and handle playing out, and we're in between this head and shoulders taking us downwards. So this week should be the deciding factor in the overall market trend. Because again, this is going to be the structure that determines whether we break out of this major consolidation range or, break down underneath it. So really, I'm anticipating bullishness. There's a lot of reasons to be bearish though, but I want to show you some reasons why I am looking closer to the bullish upside overall. Now for the IWM, I want to start this by looking at the weekly time frame. And really, this is the story of what's going on right now is that we had major buying above the upper Bollinger on the weekly time frame, and whenever that occurs, generally you see some downside support retested. Um, on the weekly, it can go all the way down to the 20 MA, which with coinciding that with the daily time frame, that would pull us a lot closer to the lower Bollinger. However, the IWM generally does like to trade at the or above the upper Bollinger range. So buying at the 20 MA is really never a bad idea, because either you're going to be buying shares and you just have to wait a few months for that to make the recovery, or you buy contracts, make sure you get them a few months out, and then you're generally always going to be seeing that upside. It's not like this is the top in the Russell 2000. Um, so yeah, you're seeing a little bit of selling right now, but I do think overall that looks fairly good. I just would be concerned with this turning into a larger head and shoulders and potentially pulling down further. But um that's something you can monitor with the actual 5 mile level. We're seeing a little bit of bearishness with the 5 mile pulling underneath the 10 mile, and I believe on open tomorrow it'll actually be underneath the 20 mile as well. So that is a little bit of a concern, but again, just monitor it day by day. If there's more interest in IWM, I can dig into it a lot further. And getting into the HIG, this is the high yield corporate bonds ETF. So generally, this is something many of us use to, have as a broader market equity indicator. Because generally, when we're seeing larger selling within the HIG, you can anticipate larger selling to occur within, the SPY, QQQ, other major symbols like that. And that's something, we're trying to watch for. Now, the overnight on HIG, I don't ever pay attention to that because people like to bid the spreads both high and low. So that's very, very inaccurate. Uh, If we see further selling and really you want to see that lower Bollinger being pushed, so basically below the 80 point basically the 80.70 cent range, um if we start pushing below that and seeing some of these really really large candles, that's when you should be concerned. But right now nothing is telling me that a major sell-off is coming. If anything, the ADL has actually been pulling upward, so I am still expecting the high yield credit to be buying upward, which actually does suggest that there's very likely going to be bullish buying in equities. Now, within semiconductors, we did have a little bit of that upper Bollinger rejection going on. And we did talk about how if they did not have a major, um, basically buying day to the upside, that there would be that rejection very, very likely to the downside. Um, Now we did only expect closer to the 5 mile, so it pulling down even further than that was a little bit unanticipated. Um, I I would assume the next range they'd really be looking for would be that 20 mile range because we have not tested it since the end of December. Um, if they're looking for major support, that's where you go. You dig into either the 20 mil or you go to the lower Bollinger. Now, I don't really anticipate semiconductors to push to the lower Bollinger. We have AMD this week. Now, if AMD has a very, very, very bad earnings or has a super bad forecast or something or guidance, then we absolutely can see semiconductors sell down to the lower Bollinger, but overall, it just looks like a support retest. The ADL is pulling down slightly, and it has been overall trending downward. So that is something to be concerned of. Um, especially when this has been very close to all-time high levels. So that is something to be concerned of. We have been seeing a lot of these upper Bollinger rejections throughout the SPY, throughout QQQ. Um, Upper Bollinger rejections can turn extremely, extremely bearish. So again, something to monitor. However, on the hourly time frame, this is starting to look pretty bearish. We did have a really nice cup and handle that was looking to build outward. However, with the selling in the overnight right now, this is actually invalidating this previous cup and creating more of a structure for either an inverse cup for further downside or potentially a head and shoulders for downside selling. So this is setting up to potentially push further to the downside, but again, AMD is this week and AMD can shift the momentum very, very quickly. And going over volatility, um, there isn't a whole lot to say right now is that on the daily time frame, on the actual VIX itself, so I do track this, even though it doesn't have an equity aspect to it, it does still have a technical analysis aspect to it, is that if we don't close this cup here, and I'm really not expecting that because this is the upper Bollinger, and what happens generally when you push into the upper Bollinger is you generally sell off from it. Now, with the VIX being at the 17.44, I know currently on the overnight it's slightly higher, but that again can shift very, very quickly. But basically, the golden rule for VIX is that if you're below the $20 range, then that is a bullish trend for the market. If you're above the $20 range, that's generally a bearish trend or a bearish spike in volatility. So, um, just be aware of that. And we also have the VVIX pushed quite high as well. It closed at 108 on Friday. I was actually expecting this to push downward more. Instead, it started climbing back up again. It's still within this very, very dangerous selling range as long as it's above the 98. then you're going to be seeing selling within equities as long as it is between the 92 to 98. You're going to be seeing that cautionary range, and below the 92 towards the 88 range is generally when you see the equity buying. So if we're going to be seeing this bearishness breaking, then the VVIX is going to be one of the first signals telling us because it will be entering towards that green range. And finishing things off tonight with precious metals, we'll start with gold, then go to silver. Um, in the grand scope, I think this is a 20 mile test. Okay. Um, Now in the overnight, you're still seeing some fairly heavy selling. The overnight is currently at 429.82. The close on Friday was at 444.95. So it is down quite a bit. However, when we're looking at the actual moving averages, the 20 MA is the primary range to be tested next. If we're going to have a further rejection from here, then it will be towards that lower Bollinger. Now, how to handle this if you're bullish is slowly start entering upon the 20 mile. Um, I'm going to be slowly taking the dip tomorrow on both gold and silver, but it does not mean we're out of the woods yet. But if we sell down towards that lower Bollinger, then that's when you really start to enter. That's the major buy area. But for the current moment, um, this is the slow enter range. This isn't the, sell everything and go enter gold and silver. Um, just be aware that that support retest can take some time. It does take time for the 5 mod to pull down to the 10 mod and, till the 20 mod. But so far, again, this does to me look like just a standard support retest. The reason why is we were pushed into the upper Bollinger for quite an extended period of time. Um, that is just screaming to have a support retest done, and looking at the gold futures, this is showing the same thing for me as well. It's just showing the 20 mAh being tested currently. Now again, this can push down a lot further. A push downward here in gold would really be a lot closer to that 4200 range. um but I still think that both these ranges are very good to enter. And the same sentiment is going to be carrying over to silver. Um, let's go ahead and swap to silver. Sorry, blind right now. I'm always blind, but especially right now I'm blind. Silver looks very scary to enter right now, but it's really not. Um, because using the last dip opportunity we had, and that was really in this 43, 45-ish range. Many people told me I was stupid when silver started dumping from, I think it was really close to that 50 range, all the way down to that 42, I want to say 43 range. And I told everybody that once you pull below the 20 mil, that's really when you start buying the dip. I was called stupid. I was called many different names, but these shares did very well. They went all the way close to 110. So I'm not complaining one bit. So same sentiment with silver, and I apologize, these technical analysis is not very technical. I'm super tired. I'm just trying to tell you just the super basics of everything right now. The ADL looks scary. This selling candle is very spooky, but we know that from the past, and it's really hard to see with this chart right now, but every single 20 mile range was a buying opportunity for probably the last year and a half. So I think that's going to remain true. I don't really see the financial or market conditions changing right now to make precious metals not the main um, security to basically load into. Now, I know the new Fed chair head is going to be a lot more hawkish. However, precious metals are good whether you have climbing interest rates or declining interest rates. Whether you enter hyperinflation or enter a basically 0% inflation economy. Precious metals aren't yield based, so they are not really influenced by that one bit. So when there's a lot of political unrest, and I don't mean that in a negative stance, I mean that just in the stance that there's not certainty in the monetary and political stance from that, is that precious metals become a super strong security to buy. Um, I'd be buying this dip very, very lightly, and if it dips further, you buy that dip, um, and you hold it. You hold it. You hold it unless the conditions change, because the extreme likelihood is that this is going to swing right back up, and many people that did not buy this dip are going to be the exact same people that told me I was buying the all-time high previously at this time. Um, I still think precious metals have an enormous amount of room. With gold, I see gold being closer to the 62, 6,300 range. So just keep that in perspective when looking at every single other precious metal that, potentially we could be seeing all that weight within silver, within gold, palladium, platinum, you name it. So going to end tonight's video there. I had a lot to discuss, but I'm so exhausted. So I will dig into it more in tomorrow's video. Thank you all for watching. Thank you for supporting me with, you know, just watching or whatever. It doesn't matter. It all helps. It's all the same. Thank you. I appreciate it. Let's have a safe and great trading week this week, everybody, and I will talk to you in tomorrow's video. Thank you.